Hey y'all, it's the weekend, so I'm just gonna do a quick weekly overview since really the data thing doesn't seem to be working as efficiently in terms of like recording the back testing stuff. So I'm just gonna go through the week briefly. I think I took two or three trades this week, right? First one was a loss, and then I took about two which were wins and losses. So like the wins kind of covered for the losses for the day. And I think what I learned this week mostly is just reiterating what I've already known, which is like proper risk management, right? Proper entries, not forcing trades, waiting for the right setups, and making sure that like let's say if I gave myself three chances to enter on that day, that's it, right? But to also not to forget to update the price. So let's say what I mean is, let's say I chose to risk an initial 1% instead of maybe 2% for the day, and I split that into three because I see three potential take profits. What I then do is, if the first trade is a loss, which was 0.3%, right, of the initial daily risk, I then update the current position, the subtracted position, the total account position on the position side calculator, and then I still risk another 0.3% for another position. If that wins or if that loses, then I still have like another chance to enter. Usually, I think if maybe it wins, then I have another chance maybe to double down on that move one more time, right? If that doesn't work, or maybe I can like keep on doubling down on that until I lose that other 3%, then that's it for the day. Or like if I just get a win, a proper win that kind of covers, especially if it covers that loss, then I can just call it a day, right? Even for a loss, it depends. I mean, the loss is just the losses. I mean, the percentage split is just for when the losses happen, and I have this maybe feeling to be like, okay, maybe that was like a liquidity sweep, and now we can have the initial move that I anticipated. Because sometimes it does happen like that in trading, where you have a move down, right? But then the market decides to wake you out before doing what you literally anticipated to do. So this is like literally the reason why I have these multiple take profits and multiple risk splits, and I really like it, man. It really helps me just double down on my skills as a trader. I like that a lot. I think today I mostly traded the TJR model, actually, surprisingly. I think I traded the AMN model. Actually, I got the chance to trade all of them, TJR, AMN, and the Freedom model. Because I think Wednesday, obviously, that was TJR. Tuesday, I think that was, no, Wednesday, that was AMN. Tuesday, I believe that was TJR. Thursday, that was um, that was the Freedom model, right? Literally, that's literally the whole bundle of the adaptive trinity right there. So I was able to use all of that this week. Use the full model um, with these risk updates that I've then put on the model, which is pretty cool. Honestly, I like it. Friday, yesterday, I did not take trades. I missed London session and I missed NY session. So looking forward to doubling down on that. Still a bit of an issue, but nothing I can't really solve. You know what I mean? This coming week is probably just going to be a breeze when I try and focus more on doubling down on that. You know, nothing you can do, bro. You can't beat yourself up for it. Why should I beat myself up for it? You know what I mean? That's literally part of being a trader, being able to take life situations as they come, deal with them the best way you can, make the choices that you can with what you have. You know what I mean? So right now, the choice that I can have is to adapt to this, make sure that I prioritize the time next week. That's what I can do, bro. Can't do anything about what's back there. All I can do is learn from it and apply it. So that's also another lesson, I guess, for this video for the week is to always learn from mistakes. I put it in quotation marks because sometimes these things actually make you a better person. You know what I mean? So don't take it too don't take it too bad, man. Don't beat yourself up for it. You know what I mean? Beating yourself up is literally one of the worst things you can do. Don't be your worst enemy. If you are your worst enemy, then I mean, come on, bro. You have to be your biggest fan. You just have to, especially in this trading space, man. You have to be. You have to be your biggest supporter and understand that losses come with the game. You know what I mean? Days are not the same. That's just part of trading. You know what I mean? Just part of trading, and it makes it there's a comfort to that. There's a something happens when you finally understand that, and you start to apply it in all factors of life, and understand that progress is not just a straight curve to the upside. You know, sometimes it's peaks, dips, peaks, dips. Literally, how the market goes. You know, I always say, man, the one of the things that kind of inspired the adaptive trinity is because of the whole concept of natural selection. I believe that the market literally paints a picture of how life literally works, the circle of life. You know, it's either you adapt or you know you have to adapt. You know what I mean? Because when you look at it in the wild, the most adaptive creatures are the ones that procreate, are the ones that succeed, right? Also in the market, in a situation where it's always moving, the people who adapt to the market are the ones that always make more money, always stay consistent, always keep going. You know what I mean? So it's literally like the same thing. The market is just a picture of life. It's just life. You can literally put the market in any situation and it makes sense. Business, right? There's losses, there's wins. Um, in nature, there's seasons that come and go. Seasons of losses, seasons of wins, seasons of hibernation, seasons of you know um, getting out from hibernation, and season for storing, season for being more secure, season for taking more risks. You know, it's literally the same thing, bro. It's just in life. So everybody basically, whether they know it or not, they're a trader. Everybody's a trader. Literally, bro. The person sitting outside, street vendor, that's a trader because they have to analyze the market. What does the market need? Okay, the market needs the people want sweet snacks, fruit, vegetables. So that's what he gets so that he makes more money. You know what I mean? And days won't be the same. Sometimes he'll be in a profit, sometimes he'll be in a loss. Literally, bro, the same thing, man. It's life. It's life. It's just that trading is like you have this clear depiction of it. You know, it's right there in the charts. Literally, that's the language of the charts. It's just a depiction of what everybody already knows. It's just most people come into it, and you know, it's a bit confusing. I'm not gonna lie. At first, but you know, once you put more time into it, it just gets easier. Bro. Like for me now, reading the markets is easy, and the nice thing about it is that there's so many ways to read the market, bro. You can't know all the ways. You know what I mean? And by ways, I mean models. And if you spend enough time, you can actually even start to create your own language within the markets. You know, be able to read candles. Like with adaptive trinity, literally, it's so simple, right? It's like made it so simple. So it's like I look at the higher time frame, previous day closures to determine the next candle closure, right? And then I just go to the lower time frame, which is usually the 1 minute for an entry in line with that. So let's say previous day's closure, body closed below its previous day's closure. I'm gonna come into that day with a bearish bias, looking for that previous day to what to be closed below before maybe price can shift bias, right? And then after that, maybe I might just for more confirmation, I might hop onto the hourly chart. Let's say I'm trading the freedom model. I hop on the hourly chart and then I wait for a bearish candle closure on the hourly, right? So a candle that closes below its previous candle, then when the next candle starts, I expect that previous candle to close below that previous candle, right? Its previous candle. So then what I do is I then hop onto like the 1 minute and I look for an SMT, right? SMT to the downside, literally. And then I put the targets on the previous candle's low, right, for a nice risk to reward. If there's multiple draws on liquidities on the way there, I might do that, or maybe I might double down on the move because sometimes these moves can like trickle down. So it could literally be from the hourly candle closing below his previous hourly candle that could lead to just a cascading move of just bearish price action for the whole day. And if maybe the risks are split properly, then doubling down on moves while taking profits can be done. You know what I mean? So, yeah, man, it's a fun experience, and I'm glad to share this with anybody who's watching, especially myself, because I know I'll be watching these a couple of years from now, somewhere sipping my ties, maybe. Actually, no, not really. I'll probably be busy doing something else, unless maybe unless maybe it's like some brief downtime, which I doubt, man. There's a lot to be done in this life, you know what I mean? There's so much to be done, bro. So much. But anyways, before I go off on that, thank you for watching, and take care, man.